You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody. That rockin' tune means it's time yet again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Where can you find all of that great Options Insider, as well as all of our radio content? Well, the easiest place to go is just surf on over to the site. Of course, the mothership, the flagship of the OptionsInsider.com, and click away. Look at whatever your heart desires that day. Could be a little bit of unusual activity, a little bit of education, some breaking news from the options market, maybe some most actives, maybe some futures-oriented stuff. Pretty much whatever floats your boat. Chances are we got something up there for you. And, of course, the Insider Radio Network is always up there for you as well. You can always, of course, just go to the homepage and stream whatever the most recent episode we have posted up there is. Could be our news show, could be this program, Vol Views, whatever program is the latest addition to the network, or you can click on the Insider Radio Network tab and dig a little deeper into the content there, dig into the archives, and pretty much find whatever your heart desires. Could be education, again, unusual activity, whatever you like. We got something for you on the old radio network. And, of course, if that's too much digging for you, then just go to your podcast provider of choice, iTunes, TuneIn, Stitcher, wherever you prefer to go these days, and grab our content there. And you can just make it easy for yourself, have it delivered straight to your device of choice, or you can even just go grab our mobile app, iOS, Android, even an Amazon version out there for all 15 or 20 of you who have the Amazon devices out there. So no shortage of ways for you guys to download or stream the show. And then once you're done listening, maybe even while you're listening, you say, you know, I don't understand this. I have a question about this, or I have a comment about this, or I really hate this guy. Typically, it's Rock Lobster, but you never know. I won't put words in your mouth. Then let us know. We love to hear from you guys. Except for that last stuff. You can kind of keep that to yourself. All right. And joining me on the old program today is, of course, the aforementioned Rock Lobster, who is waiting for your hate mail as we speak. Joining us from the hinterlands of Maine, where they're battening down the hatchets, waiting for the remnants of that hurricane or whatever it is to sweep through the area and wipe away the last remnants of civilization. Is that correct, sir?
I'm all I can say is I take umbrage right in the intro umbrage. At the
intro umbrage. We're getting even earlier.
Oh my gosh. Yes, we've got some weather. We got the Blue Angels this weekend. It is got all kinds of things, but by tomorrow it should be beautiful and lovely. So things are good in the hinterlands of Maine, I have to say.
There you go, listeners. If you're looking for a scenic paradise outside of lovely St. Charles here in the Chicago suburbs, and you want to go a little bit farther afield, maybe far almost to Canada, then head on up to the hinterlands of Maine. And you too can have an idyllic lifestyle on the fringe of civilization like the Rock Lobster. All right, and getting a little bit closer to home, we are now joined by good old Uncle Mike Tusaw from RCM Wealth Advisors, beaming in from scenic and lovely St. Charles, where it's always a balmy 75 with a crisp wind and perhaps a nice cocktail in your hand. Uncle Mike, welcome back to the program, sir.
Always good to be here, Mark. But I mean, after the intro that you gave to the Rock Lobster, I almost have to take some co-host umbrage by association with
double
that one.
Umbrage today.
No, mine's just association umbrage, because I mean you're messing with one of my boys here.
I see. So you're just an osmosis umbrage.
No, it's association umbrage. There's a big difference.
Okay, the old AU, better than the OU.
There you go.
All right. Before we get any more umbrage, listeners, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the old Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaken in today's activity. We're recording this on Thursday, September 3rd, for all of you out there playing the home game. And at least at the close here today, a bit of a quieter looking session than we've seen, certainly in the recent weeks. No massive 1% move, at least to close here, kind of fragmented at the end of the day. S&P up 0.25 percentage point or so, about 4 handles. The Dow up about a similar percentage basis. The Q selling off nearly 0.5 percentage point. And despite all that vacillation and vagary, the VIX cash also selling off about 0.5 handle or so, down to about 25.5 or so. And of course, but that kind of belies the kind of day we had. We did hit the lows in the S&P about 1944, and to get as high briefly up into the 70 handle ever so briefly. So it was perhaps a more interesting day than it may seem on the surface. But again, frame of reference is all when it comes to the financial markets, and our recent frame of reference, our recent frame of mind is plus or minus 1% to 2% moves every day. So I suppose by that frame of reference, a little bit quieter, but still a lot to sink our teeth into nonetheless. We'll start, because he took so much umbrage, we'll start with the Rock Lobster out there in the hinterlands. Mr. Rock Lobster, a lot cooking, a lot afoot, a lot amiss, a lot to sink our teeth into today. What caught your eye first out there in today's activity, sir?
One is, of course, the rally, then the non-rally, then the vol going up, vol going down, and we're at zero. I think that I can't remember the last time we had a day where we did not move.
All that Sturm and Drang for nothing.
Basically, yes. And I think we're having it coming into kind of that non-farm payroll number, and I think that's what we got. I think this is taking on some significance, actually. And this has been a hot topic of discussion in Option Pit, but mostly how we deal with how we're dealing with the Fed pulling out. And I think part of the reason we're having these big swings is there's no Fed put anymore because supposedly there's no more QE and they're going to start raising rates and things are going to get back to normal. And I guess, maybe things aren't back to normal until December if we can get through September. So I think there's for a while, these FOMC meetings have been kind of non-events once sort of the QE thing has kind of come down the path. And we haven't raised rates earlier this year because we got the Europeans and we have the Chinese and we've got this and we've got that. And at some point, if we had pretty decent GDP numbers, and if we do see that job growth, although the ADP number was weak, if we do see a strong job number tomorrow, maybe the Fed just says, okay, we're going to lower, we're going to start raising, and that's about it. And let's see what the world does. So I think there's a little bit on this one more than normal, and the realized vol VIX is still 25, 26. We still have backward futures. So that usually means any day you can be up or down 2%, at least. So today is the first day that we didn't. And I think since last Monday. So that's 9 trading days of like 2% moves or something like that, at least intraday. So it's been plenty busy. And I think they're going, if the numbers kind of blasé for tomorrow for non-farm payrolls, probably we see a pretty good kick in the vol. They're going to kick it in the teeth, so to speak.
So to speak, sir. Yeah, talking about the Fed, it is kind of interesting. I guess you can file this under the kind of the duh headline of the moment of the day. But there was a panel. I don't know where they had this session, but there was a panel of ex-Fed officials and they were polling them on, of course, the question of the day: will they, won't they? In terms of the Fed moving, and pretty much all of them, the entire panel, I think the majority at least, said kind of what I think everyone at this point seems as a done deal, that there will be no rate hike in September. Some comments coming out of that. I think a former staffer, they don't say what level he had, said the global economic situation has deteriorated. Again, the headline of the day, and not by a trivial amount. So it'd be hard for the Fed, who has cultivated this rally so carefully, assuming recovery so carefully, to go ahead and take the risk now of shooting it in the foot with any sort of rate hike, especially in the teeth of China slashing rates and other macroeconomic developments. It certainly does seem to be all the headwinds are against the Fed at this point from a rate hike perspective. And even if they did, how many basis points we talking here? Is this really going to be anything of significance? Yet it continues to dominate the headlines, so we will, of course, continue to discuss it because you guys continue writing about it as well. But still, it is kind of, I think, the duh thing at this point. I think even December, I would think, would be off the table at this point. But the Fed has surprised us before, so we'll see. But I would kind of lean with the rest of these Fed officials. Naught shall occur in September, despite Miss Yellen's pleas to say, hey, we're still relevant over here in the market. Look at me, we're still relevant. Okay, speaking of looking at me, let's turn our attention, not to me, of course, but to Uncle Mike Tusa. And in addition to sipping his nice cocktails out there in lovely and scenic St. Charles, Illinois, Uncle Mike, it was an interesting day. I think we kind of joked about it with Andrew that, of course, we had all this vacillation, all this movement to kind of end right around where we started. So it was a heck of a lot of noise signifying nothing. I think they just do this on these days, Uncle Mike, just to keep your BBI high. Otherwise, it'd be all just paradise and smooth sailing for you out there.
Of course. The only thing that can possibly go wrong is if the market goes against you in St. Charles, of course. But on the St. Charles Stock Exchange, everything always goes up. We've figured it out. We don't understand why the rest of the world can't.
The good old SCSE. I've traded many shares on it.
That's right. But in looking at it today, I'm not surprised from the start to the end. The fact that we didn't really have too much point-to-point movement, but everything in the middle, it is kind of surprising how we did have that little bit of a rally and then it kind of tapered off. I was expecting this to be kind of a flat day today just because of the unemployment report and the non-farm coming out tomorrow, but I was a little bit surprised along those lines. Getting it back to the Fed, I would like to see the Fed raise rates. So, Ms. Yellen, I know you listen to this show all the time. I want you to raise rates. If we just do this quarter-point rate hike, it's one that, we'll probably have a little bit of a pullback in the marketplace for a little bit. But you know what? We got to take our medicine at some time. Let's just get it over with. Now, I agree with you and Andrew. I don't think that that's the way that the Fed sees it. I think that they will continue to punt. But I'd like to see it just happen just to get it done with. It's a quarter point rate hike. If we have this strong, bustling economy with which we supposedly do, it shouldn't hurt us too badly. And if it does, then, the market should recover over time. And if you're concerned about the short term, buy puts.
There you go. Well said, sir. It is surprising to hear you, the most bullish on the panel here, advocating for a rate hike, particularly now in the teeth of, shall we say, a little bit of turbulence in the old market. I think any rate hike at this point, even if it is as negligible as like a quarter point, like you're saying, could be a significant shock to the system in terms of setting us off once again on one of those death spirals like we had last Monday, from which who knows if we shall ever recover given this less than liquid environment we're in right now. So I am a little bit surprised to hear you say that, but I suppose it would be interesting just to kind of get it behind us, because you're right, it is kind of just a lot of nonsense over essentially what would probably amount at the upside, the utmost, to a quarter of a percentage point. But still, diehard bull in you surprises me to hear you say that.
The diehard bull in me thinks that we can recover from it fairly quickly, though.
Well, there you go. I suppose you have more confidence than I in the upside ability.
There you go.
I mean, look at today. We did get some highs, and they didn't really last too long. And we've had that movement a few times or so this week. So yeah, perhaps you're a little bit more confident than I in this market. I did say in our last episode that I don't play a lot with a lot of underlying, but some of it I do, and some of our longer term retirement oriented stuff. And I put all that pretty much into cash this week too, because I have very little confidence in this market going forward, at least for the near term. So yeah, you and I perhaps a little bit different outlooks. But again, that's what makes a market. Mr. Rock Lobster, what do you feel on this this quarter point? You think this would be? Do you agree with our diehard bull here that the market just get it, do it, and be done with it, or are you kind of like, what's the point?
I think we definitely should be get it done, get it over with, and then see what happens. But the Fed's not going to do that. There's like one of my clients says, is pretty smart guy. They get no credit for doing it right now. So there is a political, there is a political aspect to the Fed, but at some point they have to stop doing this QE. I mean, the financial crisis theoretically is over. What we got now is we have twice as much debt for very little economic growth. And I think that's, and the Europeans can't afford to put on much more debt, neither can the Chinese. So you just got to do it the old-fashioned way. You have to do it with macro policy making and people going out there and working and feeling confident again, and taking risk. And I think that comes from, at some point you need to show some leadership, and the Fed has to do it. They got to stop waffling on this whole thing. But as far as being bullish, we tried to test, 2100. We try to break out of that 4 or 5 times this year. I don't see this equity market going back to the highs of 2015 this year. I don't see it.
2 votes against the bull, Uncle Mike. We'll see.
Hold on a second, though. Hold on. You had me on. You muted me for a moment there. So allow me to clarify once more. Would we have a pullback if we did raise rates? Yes. I think there's no doubt about it that we'd have some type of a pullback. But let's say that we go down 10 or 15% in the S&P this year. If that's the case, then number one, you should be prepared for it as an investor, whether you're a buy and hold investor, whether you're hedging yourself, or whether you're just getting out of the market as it starts to come down. And number two, markets go down some years. If that's the case, you're going to be okay if the market truly does go up over time, which it has. There's no major asset class in the history of the United States that's outperformed U.S. stocks. If that's the case, then we need to handle it. We need to take this on at some point. And I'd much rather give up a 15% loss in the market this year than have to continue to go on taking these steroids, so to speak, that we're taking from the Fed. So would it come back? I'm not uberly bullish right now from the standpoint that in my S&P call account, I'm in cash. So in terms of me putting up or shutting up, I've gotten out of a lot of things, and I'm still hedged on a lot of long equities that we have as well. But I'm more than happy to take on a 10 to 15% drop in the marketplace. Me being the diehard bull technical analysis / veterinarian that I get the label and bond specialist that I'm labeled of on this show, as opposed to this continued steroid shots that we've been taking. And by not taking our medicine, it's kind of like by not raising rates, I think we're just continuing to do just the latest version of another QE to some extent.
Spoken like a true former football player, sir. I can't even say it. Equivocating it to, let's say, PEDs in football. The market getting a little bit of juice, a little bit of steroids in it. I never heard of a financial enhancing drug before, but maybe an FED. Maybe we created a new categorization. What do you think?
The FEDs, I love it.
All right, before we get too far down the narcotics and drug rabbit hole, let's turn our attention instead. It's that time of the month, listeners, beginning of the month, so we have some numbers from exactly how last month looked from a volume perspective. If you've been listening to the show for the last few months, you knew 2015 not exactly shaping up to be the end-all, be-all year from an overall options volume perspective. I kind of liked on the old volume, particularly at the beginning of the year. There was a lot of hand-wringing about how do we get the volume up. Year to date, we were still substantially down. Everyone was saying, we need at least one good month to really get us back, and maybe get us back into within spitting distance of tying last year's volume at the very least. And surprise, surprise, August was indeed perhaps that month. It was indeed no surprise that it was a very active month from an overall options volume perspective. When we spend almost half the month vacillating up 1 or 2% a day, chances are you're going to get some options volume, and we did indeed see that, last month with the numbers coming out of the OCC for August. Overall cleared contract volume, 434.3 million contract. That's up a third. It's up 33% from August of 2014. Again, August, traditionally a quiet month, so you're comparing a super quiet month last year with a rocking and rolling month this year, but still, just a ton of volume. Last year, only 325 million contracts going up, so nearly 80 million plus contracts, substantially more, actually more, over 100 million contracts more over this past month here. Year to date, which is also interesting. You remember last time we were talking about being still well south of last year's volume from a year to date perspective. Well, now actually year to date, we're up a fraction of a percent, 0.15% from 2014 with 16.8 million contracts in the hopper here with 2015. Breaking it down a little bit more, looking at just overall listed options volume, which is where a lot of our listeners' interest lies, up about a third again from 2014 with 220 million contracts. Equity options volume, 373.6 million contracts, a 30% increase from August 2014. Index options, surprise, surprise, up 60% from last year. So robust activity out there in the S and other products to the tune of 52.7 million contracts, up again aggressively from 2014. So if you're looking at it at least from last year and even year to date, this might have been the straw that broke the camel's back, that bad camel that had us weighing down all year, and maybe turning the tables going into the rest of the year to see if we can actually be up on volume for 2015. And again, so far, September is off to an interesting start. We'll see if the volume numbers can maintain. Certainly not as much as they were in August, but we'll see. And of course, last year, October was the big month that really set the year apart. We'll see if we follow suit again this year. But so far, at least, August, kind of the month that brought everything back together and tied everything up with a robust, to put it lightly, a very, very robust trading month. Now we talked about overall volume. Let's peer our microscope a little bit closer and dive into some of the more dubious, weird, head-scratching paper that caught our eye in today's session. Yes, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block. Everyone's favorite portion of the program. This is not tell Uncle Mike about the strategy block. No, indeed. Everyone's favorite portion of the show where we dive into, of course, some unusual activity, some shady business, shall you say, over there in the world of options. We're going to kick things off with our resident cheapie name of the day. Once again, back into the energy realm. Energy realm, of course, been rocking and rolling of late to continue today. Going to kick things off here with Cobalt International Energy Inc., ticker symbol CIE, closing right about $8 even, up about 30 cents or about 4% on the day. This is the name that does about 1,000 or so contracts a day, doing 16,000 today, and about nearly 21 to 1 puts over calls. That'll tell you exactly where the activity was that caught our eye today. If you want to find it for yourself, listeners, you got to scroll all the way out to the Jan 2017 5 puts. That's where we saw a Buffett-esque type trade going up out there. In particular, what caught our eye to start off was one block on the bats of 2,000 of these Jan 5 puts, Jan 2017 5 puts going up. Looks like paper selling for 75 cents. As the day went on, we had significant additional volume piling into the tune of just a handful of contracts under 16,000 total on the day. So I said before they did about 16,800 and change contracts here today. 16,000 of it pretty much coming in this one big trade on the Jan 5 puts. The latter volume also over about in that 75 cent price range. There were some 80 cent prints going in as well. Either way, there was about 20,000 contracts going up. 20,000 contracts open on this strike. So looks like probably some closing paper out here. We'll have to know for sure, of course, tomorrow until we get that magical intraday open interest update, which won't be happening anytime soon. But it does indeed look like we got some close in. There was looks like a little bit of back and forth. There were some bids flying around here and stuff. There was some interesting action on this strike throughout the day. So, Mr. Rock Lobster, kick us off here. What's your take? You feel this is closing? You think all this was paper selling, some scattered buying? What do you think was cooking up here on this CIE Jan 2017 5 put strike?
I think somebody was definitely doing it was hard because all the paper was kind of, there was a time there was the market was $80 a dollar, and then a ton of them trade 75. So I was using that kind of as my guide, where there was tons trading 75 cents, and they pound them down. And the 80-cent bid kind of popped up and filled immediately. And then by the end of the day, there were 75 bids. So I think there was still some demand for them, but I think somebody did kind of draw a little line in the sand at $5, actually $4.25. That's what I would say there.
It certainly seems that way. I'm looking at the chart here for good old Cobalt, and certainly over the past year, there's been, I think the lowest spurt we saw was down to about just brief flirtation, a penny into the 6 handle. That was kind of about it. So not really anywhere close to 5, let alone 4.25. So someone clearly feeling pretty comfortable drawing a line in the sand pretty far out, Jan 2017 on that 5 strike, and saying, you know what? If it gets below 5, I'm going to buy it all. And so our friend here clearly doing that today. We'll, of course, see the numbers tomorrow. Again, tons of open interest. So it could have been closing, in which case he is perhaps giving up the ghost on his hedge or decides he doesn't need it anymore. Maybe he unwound the underlying portion of it, and now he just wants to unwind the puts. That could, of course, be the case as well. But it does have the feeling of someone coming in and pounding out a line in the sand. So maybe it is indeed additive paper. We shall know the answer to that mystery by the time you hear this tomorrow, listeners. Meanwhile, we're going to stay in the CIE realm. We were doing a lot of alphabetically oriented searches today on the old site. Listeners, going to move on now from CIE, good old Cobalt International, to CIEN, in particular, CIENA Corporation. This one, of course, like I said, CIEN closing today just a tick under $23, up about 50 cents or about 2.2% on the day. This is the name that does about 5,000 contracts a day, doing nearly 30,000 today. It should be noted today was earnings. They announced earnings before the bell. Market apparently liking some of what they saw, up about 2% on the day. So not a huge rally, but nothing terrible either. And it seems like perhaps whatever they saw going on out here, our traders here decided now that the storm is over is the time they apparently want to get in on some of this action. In particular was the SEP 22 halves that caught our eye going up when we started looking at these today. One block on the Philly, pretty sizable block of 5,465 cents. Looks like paper selling. That's on 0 open interest. As the day went on, though, some other interesting paper was kind of weird. This did go up. We didn't see any, didn't go up tag with stock, and we didn't see any stock with it. So it doesn't look like it was done with stock. But there was also some sizable activity on the 23 strike right above it, literally half a strike above it, where there's 6,000 contracts open, and 6,666 went up, an exponentially larger than the number of the beast amount of calls going up on the SEP 23 strike. So perhaps someone rolling down to the tune of half a strike. That would be an odd one as well, though. But again, Mr. Rock Lobster, we've seen weirder things than someone putting up nearly 14,000 contracts to roll down half a strike. So what's your take here? What do you think they were up to in this pretty much free-for-all out here in the 23 and 22 half strike in SEP in good old CIENA?
I want to say that they were just sort of pounding the strike a little bit. It kind of like felt like a long holder of stock. We had a rally, and they're just going to write the calls and try to take some money. That's what it felt like to me. Because the big block of calls went up prior to the other one. They didn't look linked. So, anyway, that's what it looked like to me. I didn't see the two calls together being linked, but it could be. But I didn't see how that worked.
Yeah, it looks like there's a bunch of weird paper out here because it looks like there was also there's about 6,000 open of the 24 calls. Maybe there's a 23, 24 vertical, and these 22 halves are unrelated, and someone just decided to close out the 23 portion of that spread. There could be a lot at foot. I mean, after earnings, they're just deciding to close out the position, or at least the meatier portion of it. Either way, yeah, some weird stuff afoot out here. Also about 2,500 of the SEP 20 half puts going up on 2,500 open interest, so clearly closing out there as well. A lot of post-earnings closing here, and perhaps the same afoot here on this 22 half, 23. That would be a funky spread, and certainly a lot of contracts, a lot of hassle to go through just to get another half a handle. That could indeed be the case. We've seen weirder things, but it would be a lot of work. Looking here at the chart for good old CIENA, was very, very recently down in late August, was trading right around the 20 handle. Actually got as low as near $18. So this thing has been in rally ho mode over the last few sessions to the tune of 5 handles here now in this name. So interesting time. Perhaps our friend deciding maybe a little bit more to do, or maybe he wanted to be just that little bit extra half a buck closer to the fire here, and was worth moving around 14,000 contracts to do that. Either way, we will know for certain tomorrow as we pile on into our final name, our final victim, our final celebritant, whatever you want to call them here in the old odd block. We still haven't decided what it means to be featured in this segment. Is it an honor? Is it a rare mark of distinction? Is it a point of shame, a scarlet letter, if you will? Perhaps all of the above. I kind of fall on the more of the all of the above. I'm not sure if anyone really wants to be featured in it, but it isn't perhaps the worst thing either. But in the meantime, we're going to check in on one of our old friends. We haven't checked on any of the wisdom tree names in quite a while. And we're checking in today on the wisdom tree India earnings ETF, ticker symbol EPI, closing today 19.5 roughly, up about 23 cents or about 1.2%. This is the name that does on a good day about 8,000, maybe 9,000 contracts a day. Today doing nearly 61,000. So from a unusual volume perspective, this one certainly our leader of the day here, and pretty much all of that unusual paper came in a massive put buy here. In particular, it was the Jan 2016 18 puts that caught our eye, with an opening mega block of 20,000 going up on the Amex paper, buying for 90 cents as the day went on. About 40,000 more piling in to the tune of, yet again, about 60,000 contracts on this strike, all on about 3,600 contracts open interest. So clearly opening paper, and sizable opening paper to boot. Looks like we went up with stock in massive blocks, with the stock pretty much right around where it closed, right around 1947 or so. So it looks like a massive delta neutral put buy here, going up, of course, buying puts, buying stock, and of course looking for some serious near-term, or actually not that near-term here, longer-term vol here in good old Wisdom Tree. Looking back here, this name has been rocking and rolling like much of the market of late. Was trading again south of the 18 handle, 17 the orders or so, just about a week or so ago. So this one has been rocking and rolling, and before that was trading back up at 22. So it's seen quite a range of late, and our friend out here putting a lot of money where his mouth is, saying, you know what? That vol we've seen out here of late is going to continue, and it's going to do so quite aggressively. Mr. Rock Lobster, take us home. What's your feeling? What's your take on our friend here putting up some size, put some stock here in Wisdom Tree?
you know what I found funny about this trade is just, how much they jumped in. It's a big put in the stock trade, don't you think?
A little bit, yeah. A wee bit sizable.
It's sizable, but the funny thing is I'm looking at the realized vol, where the market's gone. I'm like, yeah, even though the vol's high, it doesn't even look that expensive. By December, we could be anywhere. I mean, literally, we could be down 20% from this level, no trouble at all. Or some of those emerging markets can pop. It's crazy. So I like the trade. I think it's a trade that's going to pay, to be honest. I was actually looking to copy it today. I was poking around trying to buy some gamma because I'm trying to add sort of short vol product positions, but long gamma in individual names to sort of balance the thing out. But it's kind of right up my alley.
It's funny you mentioned that, because when I started looking this one over earlier today, and I was looking at the chart, I had the same inclination. I was like, this guy may be onto something here. This one doesn't look like a bad bit of positioning. Of course, he sucked up all the Vega in the room, so you got to look a little bit further afield. But still, yeah, this guy may be onto something here. At least in near term, this thing has been rocking and rolling. If it keeps up even a portion of that, this guy's going to look pretty good.
No, I think so. I think it's. And we could be anywhere. I'm not seeing the highs of the year anymore, but I think some of these emerging markets have been so just literally decimated. I mean, we're talking so a lot of them are 2-3 year lows. Although India has been holding up better than most. Anything could be anywhere at this point. I think you got all of this QE. You've got a lot of currency issues. I don't know. It feels like it's still, you could easily just throw a match on the whole thing and you get a tinderbox again. So I don't think any gamma is overpriced at this point. I don't care how long you buy it. I mean, within reason, but I still think that stuff pays.
Don Schlesinger just started coughing up blood, sir.
He did, but I think Don would. I don't know if Don would be selling the options right now.
Yeah, he would definitely be in no sell mode right now. Definitely.
Right, he would be. I'm going to wait and see a little bit.
All right, listeners, you don't know what we're talking about. Check out the Volatility Views archives for one of our more famous or perhaps infamous vol sellers on the old network. The man never met a contract that he didn't want to sell or perhaps not sell. Certainly never buy. Sell or no sell, as he would like to say. All right, that's going to close it up for the old odd block today. There's some trades out there we're not talking about in the show that you want to see us talk about or you want to ask about. Let us know. A lot of you guys writing in with some of our other unusual activities. So I think without further ado, we got some time left here. Want to make sure you guys get some time on the old show. So without further ado, let's dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, welcome indeed to the mail block. Really quick here, let's kick things off because I was talking about the odd block before with a lot of you writing in about this VXX put trade we featured on the site recently, just a few days back. Got a lot of discussion on Twitter. What are people up to? What do we think about it? What do we think about these SEP weekly puts going up in one block of 24,000? This was in VXX. We talked before about the long-term erosion of this product. What do we think about such a near-term put buy? But we did neglect to include the strike. A lot of you guys wrote in asking about this one. Apparently this one hit a nerve. Twitter, Facebook, email, our feedback form, you name it. I think just about every form of contact for us was utilized to ask this question. What strike was it? I know we have fixed it since on the site, but Mr. Rock Lobster, for all the people who wrote in, let's just make it easy for them. What the hell was the strike we were talking about here on these VXX puts?
Well, I don't think it matters anymore.
Quite frankly, it doesn't. But just for the record,
20 strike at the time.
Yes, it was the 20 strike. Yes.
And they are now. What's funny is they're trading for 3 cents. Oh, those next week's 20 puts are trading for 3 cents. To give you an idea of what might be going on in this thing. The only way I thought there was an outside this, I think. From the realm of possibility, we were trading 25 handle today in VXX. There was an outside chance maybe at the beginning of the week that it could get to 20. but I think that's pretty much evaporated at this point. I think the VIX futures would have to trade in the teens almost, and I don't think one non-farm payroll report with China closing this week and then they reopen on Monday after their national holiday is going to make VXX go down that much. So, I think they're as a follow-up, they're buying the 20 puts for next week too, paying 3 cents. So I think the same customer, it's probably fun. They got a lot of money and they're taking a cheap shot at the vol collapsing. And it would not surprise me. Not surprise me in the least if it did happen, because this vol shot came as fast as it went. I think there were good reasons behind it, but again, we're not going to see if it's almost like there's a war between the bears and the central bankers, and we'll see which one wins.
Indeed, and we have learned our lesson, listeners. We know a lot of you like to read those unusual activity alerts, and we'll put the strike in for future segments.
It made my heart feel warm that I had readers that read my work.
Yes.
And they're like, hey, Andrew, you idiot. Put the strike back in.
We love it, you effing idiot. What's the strike? It's kind of like a bit of a backhanded compliment there, but we'll take it. We'll take the love any way we can get it here on the show. Moving on to another one a lot of you guys were interested and heated about. This was an article up on Zero Hedge. A lot of you were asking us about good old Zero Hedge. They're one of our favorite outlets for some of the more esoteric, exotic, strange articles about the market. When someone posts under Tyler Durden that they're probably trying to push a few buttons, and they often do sometimes venture into tinfoil hat territory. This time, not so much though. At least not to maybe the extent they usually do. This question comes from Miles D. He writes, "What's the All Stars panel's take on this article? Are they right in saying that options gamma hedging can so dramatically move the market?" And this article was from Zero Hedge. I think the title was JPM Head Quant warns second market crash may be imminent. Violent selling could return. So look for that over there if you want to read the full article. Listeners, we'll link to it in our show notes as well. But this actually touches on a report we touched on the show recently too. This JP Morgan estimate that up to 20% of market volume back last week during the crazy tumult was driven by hedging of various derivative exposures such as options, dynamic delta hedging programs, a levered ETF, stop loss orders, and other related products and strategies. I love how he lumps in a delta hedging with and vol hedging with levered ETF stop loss orders as if they're exactly the same thing. But he goes on to write, "Hey, we estimate the cumulative selling pressure from options hedging during the market sell-off to be approximately $100 billion. He believes options gamma is expected to remain substantially in excess of $20 billion, tilted toward the puts, while the S&P 500 is between 18.5 and 2,000. We are certainly in that range right now, hovering around 19.5. This is the question a lot of you have. Actually, had a similar question from Musin, I believe. Could it be that huge options portfolios in macro hedge funds are to blame for Monday's big move in the market? So let's take all this kind of together in one touch. This is something we've actually hit on the show before, this notion of end of day gamma hedging, gamma scalping, typically gamma hedging, and usually it's negative gamma. So it could be sometimes, people taking their lumps at the end of the day. But that does very much factor into that end of day, particularly in that last 5 to 10 minutes of the day. Sometimes we see just extremely quick, rapid moves in the S&P and others. And a lot of that can sometimes be attributed to end-of-day gamma hedging. It's the options kicking in there, people taking their pain, taking their lumps at the end of the day on the short gamma, or perhaps locking in a hedge, locking in some profits on their long gamma at the end of the day. But either way, that is a factor in a lot of products, some more than others. It does happen a lot in the S&P. Whether these numbers are exact or not, I haven't had a chance to really sit down and break down the exact positions out there in terms of a 100 billion sell-off pressure here from the options positions, but that wouldn't surprise me. It is a very massive institutional type product, and options gamma hedging, both positive and negative, does have an effect on the underlying, some days more than others. As to the second part of the question that Musin wrote in, a lot of you others wrote in saying, was that the cause of the massive sell-off on Monday? That was not the cause of it. No, I think other things were, like we talked about in the show before, a less liquid market like we have at the end of summer, very few liquidity providers left in the game to backstop a day like that. Some of these stop losses being triggered and exacerbating things as well. The gamma certainly didn't help, but it wasn't, I don't think, the catalyst that caused it. Something else caused it, and then the gamma may have exacerbated it. That certainly could have been the case. But indeed, interesting stuff. And this is, as far as zero hedge goes, this is actually pretty pretty calm in that respect. And they're not that far off base. I mean, gamma does exist to this extreme. That could be debated, but it does exist, and it does have an impact at the end of the day when all the hedging comes in. Uncle Mike, Skype wasn't smiling upon you before, but we have you back now. We'll give you first crack at this one now. What's your take on all these people writing in with this article, and just in general, your view on the impact of gamma hedging, both short and long, on the end of the day on big indices like the S&P?
Okay, so first off, Mark, I agree with what you're saying. I don't think it was the cause of what happened on Monday, but it could be something to kind of add a little bit of fuel to the fire. The second thing that I want to add to this is that the word derivative can be bunched in a lot of different ways, especially by the media, because of the fact that it's not understood very well. Derivatives did play a part in the economic crash of 2008. I really believe that, but they were unregulated in that you got things to where it's so far beyond my comprehension how we're having derivatives on derivatives on derivatives on illiquid products that it didn't work. And option derivatives that we talk about on this show, that we trade in the option world, in the futures world, whatever, they're regulated very tightly, so to speak, by exchanges, by regulators, and SROs. And to give you an idea of it, in terms of how much money the CME lost during the crash of 2008, the answer is zero. Now, they've lost money at times because of different things, but in terms of how much have they lost because they weren't capitalized or they didn't handle their margins properly, the answer is zero. So the other thing that I want to add to this is that oftentimes when people talk about trading derivatives, it gets kind of a bad name because of what AIG did and a lot of things that happened in 2008. But the ones with which we talk about on this show that are on the options exchanges, we're doing fine, folks. The other thing that I want to add to that is the fact that can options move stocks? It's possible, but it's not something that would happen very frequently. So, for example, if all of a sudden we had some program trader wanting to buy 68 trillion S&P contracts to hedge a position or something like that, then yeah, it's definitely possible that could set off the market. But the same would hold true if someone wanted to go long that amount as well. So if you do believe that derivatives can cause crashes, then by the same token, you have to believe that derivatives can cause huge uptrends as well.
Really quick before we let Andrew chime in, since you mentioned the exchanges, we have a related question here from ADM. They write, hey, during last Monday's activities, were there any options exchanges that failed? And getting back to what Uncle Mike was saying about how the listed stuff tends to work pretty well, the answer was no, they work. And the dozen, soon to be 13 exchanges of listing options out there, we didn't see any really major meltdowns. The biggest issues we saw on the tech side were actually on the brokers. I mentioned TD and Scottrade having some of the largest outages and slowdowns out there. So on the brokerage side, which again is not ideal, of course, we had issues, but I didn't see any major meltdowns on any exchanges. So that at least is a good note. All right, back to the gamma hedging and its impact on the market. Mr. Rock Lobster, what's your take on what they're talking about over here at Zero Hedge?
You know, the Zero Hedge guys are the Zero Hedge guys. They like throwing they like stirring the pot. It's funny. I like that Mike says, well, if they have to hedge the downside, if you're short gamma, doesn't that mean you got hedge the upside? You have to admit, I mean, you have, what do we have? 3% rally the other day. And last week we had like a 3% rally. So it sure looks like somebody could be gamma hedging the upside. As far as all the other, a 3X products, Direction has a 3X bear and a 3X bull. So probably one product is just trading with the other product. And as far as the exchanges go, the exchanges have been able to margin. They learned their lesson in 87 about how to margin trades, and all the clearing firms learned how to margin. So as far as you have an OTC, OCC regulated clearing operation, they know how to margin because they charge people margin. The problem with the AAG is they basically sold an unlimited amount of puts, and they weren't margined properly. And has that really changed? I don't know. I don't think the government. I think at this point, the markets are big enough is that everything should have a third-party clearing operation. The problem is you could have the whole reason why we had the financial crisis in the first place, because you think about it, some guy's getting smoked on something, somebody's doing well on something. So there's got to be the cash is just a transfer, right? But the biggest problem was the leverage. So nobody knew what they had under their skirt. And when you have just a standard counterparty operation, and you're going to enter into a counterparty with somebody else, you don't know if they have the margin or the money to make it good. If you have a body like the OCC, who puts the onus on the clearing firms to make sure everybody has margin for every transaction before they enter it, you don't have these problems. You have an option contract, I'm sure this week, that went from, a penny to $50, and everything cleared fine. So I think the problem is, especially with the over-the-counter stuff, is it would be nice if we had a third-party clearing operation, and if the government wanted to do it, they could do it. I don't know if I would let the same people that try to run healthcare.gov run the third-party clearing operation for U.S. over-the-counter securities. Maybe somebody that knows how to do it, like the OCC or the Merck. But all of that, there's just people trade. Short gamma trades. They blame the 87 crash on what was it called? Dynamic portfolio hedging strategies. I believe if you Googled 87 and portfolio hedging, it was the same thing. But people were getting out. I mean, what are you going to do? I mean, the thing too is, last week or last Monday, we just opened down. Now, there could have been some technical snafus about matching buy and sell orders and stuff like that, or a lot of the buy orders, just everybody's seeing the futures down overnight. And they're like, why put my buy order in now? I'll wait, see what happens. And I think and that happens. Everything opens limit down and people wait till it bounces back up. So, is it the cause of anything? I think people want to sell, they sell. And that's it.
Yeah, I definitely think that they shouldn't have lumped in these levered ETF stop loss. So that's a different animal entirely. I guess kind of away from the options gamma argument. But there is some good data. I'll have to see if I can dig it up on what some people estimate to be the net impact of options gamma hedging, specifically the options gamma stuff, on end of day volatility in some products, usually in that last 5 to 10 minute period, and how it can be seen to exacerbate things. And whether it's to this degree, that's debatable. But there is some interesting data out there. I'll have to see if I can dig it up, and some interesting estimates on what impact that has had. And it certainly has led to an increase in volatility. It depends on the product and the orders and the market conditions and everything else. Like everything else is contextual. But there is some interesting data on this, and probably more to come in the wake of the last few weeks, certainly. Good questions, everybody. Keep them coming. Fortunately, we have to keep on rolling now into our final segment, so really quick, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, time to tell you what we're watching for the rest of this week. I think we probably touched on it earlier on the show. You can probably take a guess, but non-farms are on the horizon. Mr. Rock Lobster, anything else you're keeping an eye on for the rest of this week into the weekend?
Non-farms, and then, see how the Chinese market opens next week. Hopefully the Chinese government's trying everything they can, but
what Chinese market? It'll be gone. No more.
Exactly. Very weird. The economy's growing at 7%. They got a lot of money owned to I don't know what the heck they're doing, but the problem is they're trying to run a first world economy on a third world banking system. And one of the days, and I think that's probably one of the bigger worries that everybody has, it's going to be a little messy.
Yeah, that's been the knock on China for decades, that their banks, pretty much all their banks, are insolvent by Western standards, and yet they've managed to grow for the last couple of decades in spite of that. Maybe those chickens are finally coming home to roost.
Oh, yeah, I no question. Now, my big thing is, can the vol come in a little more? Can we see some new recent lows in vol after the non-farm payroll number? It's kind of one of those Goldilocks numbers that, we're growing jobs, but not that great. The Fed probably pushes stuff off to December, and the markets might recover a little bit. Then again, I'm not quite so sure what sent them reeling in the first place. And I think really what that is, there's no QE, right? Fairly, that's what the Fed says. And everybody's worried about global growth. So all of a sudden, where's the growth coming from our equity market? Because most of the companies have big overseas exposure. So I think maybe the growth picture for now is just kind of done with U.S. equities. That's what we got. But let's just see if the vol can come in.
Not if you talk to Uncle Mike Tusaw. He says the growth is never done in U.S. equities. So Uncle Mike, what are you keeping an eye on for the rest of this week into the weekend?
The growing U.S. equities that never ends, of course. Of course, non-farms. I think that's one where it's going to tell the tale. I'm always excited about 7:30 in the morning and checking out what the futures are doing and seeing how people react to it. That's always one of the highlights of my month, by all means. And from there, I'm actually going to be very cautious in this market until we can at least go above the 2,000 level on the S&P again. So till we go there, folks, I'd recommend proceeding with caution.
There you go. Even the bull says tread lightly. Interesting stuff. Unfortunately, that's all the time we have for the Round the Block segment. Also, all the time we have for this episode of the Option Block. But before we go, as always, really quick, let's check back in with each of my cohorts here, see what they have cooking. Starting with you out in the hinterlands of Maine, Mr. Rock Lobster, I hear a rumor that you got a big webinar coming up about something called volatility. Is that what am I pronouncing that correctly?
Yeah, Vala something. Tonight, which of course all the poor listeners will not be able to listen to it. Mark Sebastian, free tonight. It will be a prelude to next Saturday, the 12th. We're going to have a primer on volatility in the ETPs, and then we'll have a boot camp at the end of the month into October on volatility. All the volatility you want to learn about. And tonight's is free, but the next two are going to cost you. But my guess is our webinars generally save people a lot more money than they cost because it keeps them from doing dumb things.
There you go. Check it out, optionpit.com to learn more. And of course, you'll have missed the one tonight, but you can always check out the archive and maybe check out the paid one and keep the Rock Lobster in his delicious lobsters for the foreseeable future. And Uncle Mike Tusaw, what's cooking in the land of RCM?
Well, today I'm still going to remain talking. I'm going to continue to talk about our self-directed traders. If you are looking to trade through the RCM umbrella at either TD Ameritrade and or Interactive Brokers, feel free to give me a call at 312-212-3531. We can talk about how we could potentially save you money on commissions, just depending on your trading style, as well as how we can help you in terms of offering advice. Now, in the coming weeks, we will be able to free up some time to discuss managing money again. But in the meantime, we are still keeping our focus on the self-directed traders. So if you have any questions, feel free to give me a call at the number I just mentioned or send me an email at mtosaw@rcmfs.com.
There you go, listeners. Hit them up for some perhaps friendly advice, some cheaper execution, or indeed, perhaps you just want to sleep a little better at night in these markets. Having someone else out there working the puts for you and doing all the other fun stuff Uncle Mike likes to do. He just say he likes to get up at 7:30 in the morning to watch the non-farms. Let him do that for you so you don't have to. Contact him and sleep a little better at night. There you go. I'll put a little plug in for him. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for sending in such great questions. We learned our lesson. We'll never put up an unusual activity alert without the strike again. And we'll see you next time right here on the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.